This afternoon, President Yoon Suk-yeol will preside over the 11th emergency economy meeting since he took office. And that meeting will be broadcast live to the whole nation for the first time. The presidential office has previously said that the meeting will focus on future economic opportunities for the nation. To discuss some key points that are likely to be discussed, we have Professor Oh Joon-seok, Dean of Sookmyung Business School, with us this morning. Good morning, Professor.
Morning.
Not only is the South Korean won losing power over the US dollar, but the Japanese yen is also at its lowest against the greenback for 14 years. What does this mean for Asia's financial situation? Is this something South Korea has to react to as well?
It will be the beginning of the tough season. The Fed determined to tame inflation even at the cost of economic growth. It is expected the hike in 75 basis points in November, another hike of 50 basis points in December. As the U.S. Fed has been pursuing hawkish monetary policy, U.S. dollar has been beating down most Asian currencies. Korean won has no exception. Korea has no other choice but to follow the path of interest rate hike of the U.S. Fed. Only tuning the timing matters for the Bank of Korea. The Japanese yen, as you mentioned, has weakened to the lowest level against the U.S. dollar in more than 32 years, raising the question of whether it will rather regional neighbors, including Korea and China. Concerns over the plunging yen have been mounting as it slipped to 150 yen per dollar, the lowest level since August 1990. A psychological bottom line for international investors. Fragile yen may spur negative investors sentiment toward Asia because Japan still counts significantly when it comes to Asian economy. Last month, foreign investors withdrew a net over 1.8 billion US dollars from Korean stock market. IMF has warned the worst case is not yet to come for the global economy. U.S. has been strained by the rapid rise in interest rate hike. The China real estate market slump and the Europe by the energy crisis. These three largest economic zones have rattled the emerging market and global economy around the world.
Right, and one of the biggest issues in the economy right now is Gangwon-do Province's decision to default on money owed from the construction of Legoland, a theme park that just opened this year. Why was this big news, and how has it impacted the national government?
It is another top matter to tackle with, as uncertainties stemming from a default in project financing for the construction of Legoland in Gangwon Province. Theme park business has not been attractive in time of economic slump, as in the case of Six Flags in the United States. Experts said it will inject $1.1 billion into the debt market while ensuring additional liquidity to cover short-term loans. A default by a public developer behind the Legoland Korea worth $142 billion US dollars worth in the debt market. In the financial area, so-called TRICE, Treasury bill, Treasury note, and Treasury bond are classified as risk-free assets, zero risk of default. State or local government debt might be considered risk-free equivalent instrument. Now that the confidence process has flopped, it might be harder to extend the maturity of the bond. It might be much harder to get a bridge loan for a matching duration of bond financing. Smaller companies are in graver hardship. They must prevent a chain bankruptcy of companies due to short-term liquidity, inability, and inaccessibility to the short-term financial market. In this sense, the government and central bank have been jointly acting to bolster liquidity. It is, however, told that the Legoland trigger liquidity crunch could be just the beginning. Time will come. Investors should be liable for their losses.
Right, a lot of losses there. Now, let's talk about other issues. As the president leads the emergency economy meeting today, and everyone that is interested can watch, what are items that are likely to be discussed that we haven't touched upon?
Top officials in charge of economic and financial policy will hold an emergency meeting to discuss response to this growing uncertainty and volatility sprouted from the Legoland cases. The emergency meeting comes amid growing volatility in the money market following a default in project financing for the construction of Legoland, as capital hoarding is expected in the financial sectors in response to a growing concern over possible credit crunches and market instabilities. What is needed at the moment is to let the market believe in the normal and regular operation of credit and loan cycle in an economy. In this sense, Financial Authority announced a plan to tap into the bond market stabilization fund to provide liquidity, which should have been earlier, I suppose, as a precedent measures to tackle with the risks in the market. At the upcoming meeting, ministers of economy-related ministries will gather to discuss their response to provide liquidity, analyze economic risk factors, and ways to secure new growth and export engines.
That's right. Well, thank you so much for your insight. Well, Arirang will be providing a simultaneous interpretation of the meeting. So for those who are interested can always tune in. Thank you again. Have a great day.
Thank you for having me.